Good day, guys. My name is Adegboye Iyanola. For people that don't know me already, I want to share the basic knowledge about the stock exchange market with you guys. For people that are not familiar with the stock exchange market and what it's all about. So this recording and video, I'll talk about the basics, not the extensive part of the stock market, just the basics. So let's go. So before we get dive into that, I have to first put out the question like, what is the stock market? What is the stock exchange market? So I have a slide here. I'll share the slide. So all these ones are just grammar. So the stock exchange market is a global network of exchanges where investors buy and sell in public companies, enable business to raise capital and individuals to grow wealth. Emphasis on the grow wealth, because that's the first thing you want to do. You want to grow wealth. If you are coming into the stock exchange market, you want to grow wealth. You are not doing anything more than that. You are not coming here to gamble. You are coming here to grow wealth. Well, it's all about the wealth accumulation process. You come into the stock exchange market, you buy public companies, and you with the intention of growing your wealth. So let me break it down. So when you as an investor, before you become an investor, you have a capital here. So you bring your capital, the public company offers the shares, you buy it. The buying of the shares gives you the ownership, gives you a particular ownership in the company. So when you buy the share, you you buy stock, and what you buy, what you put your money on is the shares. Is the shares. So the shares will be the measure of your capital, of your money. Like say you buy 1,000 shares, that's the measure of your capital that you are investing in the company. So what is a stock? Let me move to what is a stock. A stock is like owning a tiny piece of a big company. Like a big company, let's say like MTN now. We are all familiar with the MTN company. So a like the MTN company now, imagine you owning a piece, let's say 1%. For example, 1% is a lot in the MTN company though. But let's say you own 1% of the MTN company. That's what a stock is all about. When you buy a stock, you are buying a stock of a particular company, you are buying a tiny piece of a big company. So imagine you own a slice of Apple or Coca-Cola. When you buy a particular company stock, you own a tiny part of that company. So that covers it all. So let's go to who controls the stock exchange market. So the stock exchange market is controlled by a mix of players. You have couple players involved in the stock exchange market. So the regulators, I start with the regulators here. These are the government bodies like the SEC. The SEC is the Security and Exchange Commission. They operate in Nigeria and US. The US too, they use the SEC. So those are the number one player in the stock exchange market, the regulators. They regulate the market. So let's go to my next slide here. So the next player is the exchange operators, like the here we have like NYSE or NGS manage the platform. The NYSE is the in my second slide there is the New York Stock Exchange, while the NGX is the Nigerian Exchange Group. So the NYSE for the US or the NGS manage the platform in either you are investing in a US company or a Nigerian company. So we have the broker next, which is the firms like we have the Stanbic IBTC, or you can use the Bamboo app, a digital sub-broker licensed app by the SEC themselves. So we have the market makers too. They are the one that provide liquidity and set price. So we have the investor, that's you and me, and institutions like we all influence prices through buying and selling. Everyone, we have a part to play in the market. So I continue here with type of stocks. I mentioned few. There are couple type of stocks, but the one we are interested in. let me say the one we'll be focusing on is the number one. I put growth stocks here. These are stocks of companies expected to experience high growth rates in the future, often with lower dividends. So let me explain that. Like GTB now, GTB has a stock. So a growth stock is like that GTB stock. They put it out there for the public, and they expect it to experience a high growth rate in the future. One of the stock I will mention of for good example is the Guinness stock that in early January this year, the stock is valued at 65 naira. And now, what's today's date? December 30, yeah. December 30th. So the stock, here is the chart here. So January 14th, 2025, the stock is valued at 65 naira, as you can see here. But today, December 30th, we have it's valued at 349 naira, or approximately 350 naira. So this is a good example of growth stock because they expect it to grow in the future. The value of the stock to grow in the future. So we have dividend stocks. These are shares of companies that pay regular dividends to shareholders. Like shareholders, I'll get to that. For people that are not familiar with the terminologies of the stock exchange market. So these are shares of dividend stock are shares of the company that pay regular dividend to shareholders. For example, MTN, I'll mention MTN. MTN is a good example. Recently, MTN paid dividend to people that own a tiny piece in their company, their own shares in their company. They pay dividend in this month, in this December month here. So that's a good example of dividend stocks. Not all companies pay dividends. For some specific companies, they pay dividends too. And sector stocks too. It's very important to know what we mean by sector stocks. These are, in my definition here, I have these are shares of companies operating in specific sectors like technology, e.g., under the technology, I have Apple Inc., like the Apple iPhone that everyone is using, the NCR, that's in Nigeria, we have the Unicell, we have the Nvidia, or in the agricultural sector, we have the Boa Foods, the Honeyflower, or in the finance, we have Stanbic Bank, Wema Bank, Access Corp. So those are sectors. You can select to invest in a single sector throughout your investment period, or you diversify into different sectors. So let me go to my next slide here. So what are shares? So shares is also known as stock or equities, representing ownership in a company. So when you buy shares, you own a tiny part of the company. So things need to know about shares, ownership. That's the first thing. A tiny part of the company. What you buy gives you ownership. That's your part, the part that you bought in the company. So value. Share value can rise or fall based on company's performance and market trends. When the company is performing very well, it tends to influence their share value, the value of the share, where the value of the share will go up. But when the company is underperforming, then we can have the value of their share to be jumping up and down, or fluctuating, or even dropping drastically. So that's that. And market trends too, like in terms of in the when the during the pandemic time, we have this like this economic downturn that every business was coming down because of the pandemic. And market trends, like recently there is a case of that happened with Dangote, that Dangote truck killed one particular person that is a family of one ex Big Brother winner stuff. That affected the price of Dangote shares because I invested in Dangote companies too. So I bought Dangote Sugar and Dangote Dan Cement. The value of those stock came down during that time. And when the old stuff was gone, it went back up. These are the what we call market trends. So dividends, some companies shares share profit. Some companies they share profit with their shareholders via dividends. Like you buy you buy shares from a particular company. When they make profit, they tend to distribute their profit amongst people that own a tiny piece in their company too through dividends. The example is the MTN that I made mention of. They paid dividend this month, earlier this month, I think mid this month. That's a good example. So when they make profit, they change. Not all companies do that, but some companies. So that's that. So we have shareholders, an individual or entity that owns shares in a company. That if you once you buy a share in Apple, maybe you buy any tiny piece, any small value of shares in Apple, you are a shareholder in Apple's company. So that's a shareholder. Voting right too. Being a shareholder, it gives you a voting right on company's decision, voting daily per share type. So type of shares, we have different types of shares. We have the ordinary shares. So the ordinary shares represent ownership in a company. It gives you voting right and potential dividends. Like I said, not all companies pay dividends or potential dividends because some companies pay, some don't pay. So like examples are like um, companies that offers ordinary shares. Dangote Cement, Access Holdings, SLNG, GT Holdings, Wema Bank, those are ordinary shares. They offer ordinary shares. So we have preference shares too. They have fixed dividend rates. Priority over they have priority over ordinary shares in dividend payment because preference shares you will get a dividend for sure, but there is no voting right. And we have fractional shares too that allows you investing in a portion of share, making it more accessible. So these are the basic things you need to know about shares and what the stock exchange market entails. So yeah, I added some frequently asked questions like how can I invest? How do I buy stocks and become a shareholder? How do I know the stocks to buy? So that we can discuss on the group once I post this video. For anyone that is able to listen to the video to the end, then you can ask me these questions, then I can give answers to them. So for reference purpose, I already said this on the group for people that were not on the group when I said. So I said 1 year ago, Guinness stock was selling at 65 naira per unit. So automatically, if you bought 1,000 units then at 65 naira per unit, that's 65K then. Today, the current value will be 349K. That's a lot of increase. It's not even multiplied by two. It's like that's a lot of increase. This is what the stock market is all about. So let's think big now. If you bought like 10,000 units at January, 650K, 650K is a lot, and at the same time, it's not a lot. Imagine I'm sure you must have spent more than 650K since January to December. So now imagine you put 650K on Guinness stock as at that time. Your money will be 3.4 million, approximately 3.5 million now. So this is an example of knowing the right stock, knowing when to buy, knowing when to sell, and knowing when to keep. So I went my explanation here, and I hope all of you are able to listen to the end. And if you have any questions that are not listed in the FAQ here, feel free to drop on the group, and answer. I will acknowledge and answer everything. Thank you.